Hi everyone, it's Joe Veneri, the host of Fit Insider, the show where I talk with the entrepreneurs, executives, and investors who are redefining the business of fitness and wellness. Today I'm joined by Holly Maloney. Holly's the managing director at General Catalyst. In this episode, we discuss Holly's focus on growth stage investments in the fitness and wellness space, why General Catalyst led Tempo's $60 million Series B, and Holly's management market model framework for evaluating deals. Let's get into it. Hi, Holly. Welcome to Fit Insider. Thanks for joining us.
Thank you so much for having me. It's great to be here.
Yeah, excited to jump into the conversation. And I think just to give listeners a little bit of context, can you talk about General Catalyst and how you got to the position you're in and what you're working on?
Yeah, sure. So General Catalyst is a diversified investment platform. The firm was started 20 years ago to focus on partnering with earlier stage entrepreneurs, really at the earliest company formation stages in the innovation economy. The firm has grown a tremendous amount since then. We've diversified geographically. We now have offices in Boston, New York, San Francisco, Palo Alto, and have also diversified by stage. So we can now partner with entrepreneurs through every phase of their journey, from a $500,000 seed investment to $100+ million growth stage investment and everything in between. We're really focused on backing companies that we think have enduring business models and big and dynamic markets, and really look to meet these entrepreneurs where they are in their journey and provide them capital and help to get to where they want to go and where we think these companies can go, which has been a really amazing journey for our firm. I'm one of the managing directors at GC. I've been with GC for just about 3 years, but I'm a career-long technology investor. So prior to GC, I was with another growth stage investment firm for about 7.5 years. Prior to that was on the advisory side. So in investment banking, working with technology companies exclusively on thinking through their strategic alternatives. So that's really where I learned to, kind of tear down businesses, think about different business models and how they were changing, and how investors and buyers in the public markets thought about different companies and different sectors of the innovation economy.
Yeah, really incredible. Your background, diverse experience, lots of insights there. And as you mentioned at GC, certainly kind of a broad spectrum of investments that you're able to make. And I think maybe zooming in and as it relates to the Fit Insider audience, looking at some of the health and fitness investments you've done and the interest there, one that stands out is ClassPass. And we've talked to Fritz, the CEO, Fritz Lehmann, on the podcast previously. And I know a portion of the most recent fund, or one of the most recent funds, was earmarked for health and fitness. So can you just talk about why that kind of stands out as a category that you're focused on, and what those kind of investments have looked like to this point?
Yeah, absolutely. Because at GC, we really focus incredibly broadly across the innovation sectors. So, really try to invest in technologies that are enabling every corner of our economy. And, we view the health and fitness sector as, just in the early innings of what is a fundamental transformation that's going to take many years to see through and have kind of many waves of disruption over those years. I mean, obviously, health and wellness are areas that are being disrupted deeply by digital products and services. Overall, where I focus, I really want to empower people to live healthier lives, which is a multifaceted challenge that will need really a myriad of consumer-centric quality solutions to drive better outcomes. In order for, to live healthier lives, we really need to democratize the access to the right kind of health and wellness for each person. Every person has a unique stance in where they are in their health and wellness journey. And, solutions really need to be developed to meet, that specific person wherever they are in that journey. And this is, really increasingly possible as consumers are getting back more in control of their health information and can be, increasingly in control of their own health. But they really need to be, delivered this information through delightful experiences so that they actually engage in this health and wellness journey. Utilization rates should be really high. And this is where technology platforms can really come in to kind of meet these needs and challenges and opportunities, which gets us really excited. In addition to enabling, better access, I'm focused deeply on companies that can deliver, a highly personalized experience for specific personas across, all facets of life. The focus on a specific persona really should provide a unique insight and data advantage that, delivers a better experience for the consumer and hopefully, will drive better outcomes. Consumers increasingly expect, personalized experiences that they see in their other aspects of their lives to ensure that they're making the right choices for them. And really this focus on, first the personalized experiences and also sort of democratizing access has led to my investments in companies like Tempo and SonderMind and others. But, as a firm, we have said that, about 25% of our current capital base will go toward healthcare because we just see such significant transformation to really bridge the gap between, better access and better outcomes at a better cost basis for our economy.
Certainly, yeah. And I think a couple that you touched on there, Tempo and SonderMind, focusing on the kind of at-home connected fitness space, and then mental health more broadly. Can you speak to those? I mean, I know Tempo was fairly recent here. The firm led the $60 million Series B, and you'll be joining the board. So what does that look like? Obviously, given the COVID and quarantine, this has accelerated the shift to maybe an at-home workout experience. And we've seen usage kind of fly off the charts for all the companies in this space. So how did this deal come together, and what made you kind of get behind Tempo?
Yeah, so with Tempo, I mean, really what their platform is delivering is it's curating a fitness program delivered in the home based on who you are as an individual, leveraging technology to safely advance strength and mobility capabilities. So, to the thesis I was mentioning earlier about sort of democratizing access, Tempo is democratizing access to personal training in the home. It's no secret that the vast majority of fitness enthusiasts have had to think with, creative solutions during this COVID period about how they're going to, continue to work on their fitness and improve outcomes, especially if it was, individual that might have been used to, more boutique class environments. Peloton certainly paved the way and, kind of what was possible in terms of delivering digital fitness in the home and also creating a sense of community, which has been a really important part of, I think, the fitness experience for a lot of the population in recent years. Surveys are showing that, the vast majority of the population will actually not renew their gym memberships once restrictions are lifted. And so, the digital fitness platforms in the home are really taking off. We view Tempo as having true platform characteristics, which is important to us as technology investors. They have real technology advantage, leveraging data and AI to know, who you are as a person, where you are in your fitness journey, how to map out programming based on where you are, because they have, smart weights with built-in sensors that can, count your reps so they know how you're performing. They can monitor your progress and ensure that you're safely lifting weights in your home. So, I know for a lot of people, independently lifting weights might be a little bit scary because you want to make sure that your form is correct. Tempo actually has the ability to deliver, real-time feedback on your form to make sure that you're, again, improving your strength, but also doing it in a really safe way. So we think that, over time, they have the capabilities of, trainers, coming to the platform and sort of building their business and delivering content to their members at scale, which is something that we're really excited about. So we're really excited about the overall trends in the market, the deep technology advantage that Tempo has, the fact that they're catering to strength training. We think, the average consumer and fitness enthusiast is increasingly aware that cardio-only solutions aren't going to produce perhaps the optimal long-term results that they might be looking for, and the incorporation of strength and mobility is incredibly important. But most importantly, we were, sort of enamored by the founding team and their vision and sort of their resiliency to get to this point. Having amassed, sort of millions of data points that have been powering, kind of the AI and data ingestion engine that powers Tempo.
Yeah, it's, I mentioned this before we hopped on, that I had a chance to catch up with Josh Augustine, the CTO at Tempo. And, those guys have been at it for years now, starting, I think, way back in maybe 2015. So, listeners can catch that podcast separately. But I think to this point, they've come a long way and have a lot of insights. You mentioned that founding team as being so important. Obviously, in this case, the market, kind of the timing of the at-home fitness space. When you think about the investments you're making, whether that's in the fitness space or otherwise, what are some of those other filters that you're applying from team to market to timing that help you really make that determination?
Yeah. So, first, just to highlight the stage that I spend the most of my time in. So I primarily focus on growth stage investing. These are companies that have demonstrated product market fit and have, the characteristics that could either define a new category or disrupt the category as it exists today. These are businesses that are still young enough where we as investors can be really helpful in the company building phase, but are mature enough so that we can really understand, the existing trends of the business, so we can know customer acquisition trends, how the business model is really taking shape. And we really know that there is a market for what this company is delivering. And I look to invest up to, $100 million of equity into these companies over time. But, for vetting, really think about the world in three categories, and that is, management, market, and model. Sort of as I highlighted in what we saw in Josh and Moya, we look for teams that complement each other really well. And founders that have, a clear vision for where they think the world is going. Two of our, core value statements at GC are audacity of ambition and diversity of thought. And we very much seek out those characteristics in the management teams that we're backing. But, investing in companies at the growth stage, by default, these entrepreneurs are already successful. So it's all about, how are these entrepreneurs going to scale from here? How do they think dynamically about the market that they're addressing? And how do they sort of assess and attract talent to build a diverse and highly complementary team? How are they able to see around corners? And what's becoming increasingly important is how are they going to build a high-performing, healthy culture that, drives amazing employee satisfaction and retention in what is a newly remote environment for most companies. And then in terms of so, it's sort of commented on, management, market and model. So, covered the management team perspective. In terms of, the market, we're obviously looking for, really large and dynamic markets that, perhaps have, many waves of innovation to them, where we think companies can be built that have not just one act, but multiple acts to them. So really understanding what is the total addressable market for these businesses, what are the kind of unique personas that these companies are addressing and understanding deeply what how those personas may change over kind of the time horizon of our investment period. And in terms of business model, we're looking for companies that we need to deeply understand the unit economics of the company. So what does it take to acquire service and retain customers? So really the trends and behaviors of the customer cohorts are really important. We love to see really high engagement across the user base. It also is another reason why we love companies like Tempo, because the user engagement is really strong. It shows that you can continue to deliver really high value to your customer base. And the more engaged people are, the more you'll be able to sell to them over time as you think about expanding, your platform and introducing additional products. And we also love companies that have these platform characteristics. So where workflows can be built on top of them and integrations can be deep, and really building out a really strong technology ecosystem. But really to sum it up, it's companies with really strong product market fit and big markets with strong business models, and that really should drive recurring like revenue models and really strong communities.
Yeah, really incredible insights there around, I think very succinctly, the management market model is going to be a kind of a huge takeaway there for folks to think about. That tying into the Tempo investment makes a ton of sense. And we see that maybe as one, given Peloton, given COVID is kind of getting the headlines. But another one that might be a little bit less known maybe by the audience is SonderMind, which I think is an incredible investment and a really interesting company. Again, given that now we're seeing the focus on mental health, the increasing access to therapy, destigmatizing these things. Can you just speak to what they're doing at Sonder Health and kind of what attracted you to that category?
Yeah, absolutely. And, we invested in SonderMind pre-COVID, and I can assure you that a global pandemic wasn't a part of my underwriting thesis, but has certainly accelerated many aspects of this business for the better. And really what SonderMind is doing is sort of democratizing the access to therapy. So, what they're doing for consumers, for, potential patients, it's all about, the rapid discovery and matching of that consumer to the right therapist to meet that person's specific needs. So they do the, sort of the discovery and the matching of the consumer to the right therapist. But perhaps more importantly, what they're doing is they're enabling the payment of therapy sessions through insurance. So, therapy has been mostly a cash pay market for a really long time, which is inherently limiting to a huge percentage of our population that needs care the most. Therapists, it's a very low touch model just to accept cash. You don't have to think about, building the relationships with the insurance providers, go through the headache of all the billing, and figure out how you're going to, receive your reimbursements in a timely manner so that you can, manage and grow your business. A lot of therapists are sort of solo practitioners. And so, the visibility into their cash flow is incredibly important as they think about sort of the viability and the growth of their own businesses. But what SonderMind does is they really neutralize the decision for a therapist as to whether they're going to accept cash or whether they're going to accept insurance, because SonderMind has all of the relationships with the payers. They handle all of the billing and the credentialing for the therapist, so that it's economically as good for a therapist to accept insurance or to accept cash payments. So it allows therapists to focus on what they do best, which is seeing patients. SonderMind handles a lot of the back end processing so that the therapists actually open up their supply. They can see more patients, they can grow their business, which is amazing for the consumers because there's greater access to care. As you chat with some of the largest insurance providers in our country, they're just so focused on creating more access for people that need care in the behavioral health space. And so companies like SonderMind are helping to solve for that. It's really about making behavioral health more accessible, approachable, and more utilized.
Sure. And one thing I think when you look at some of these spaces, and when I talk to founders and investors across the kind of health and fitness landscape, one thing that comes up, which I think is incredibly important, the increasing access, the democratization of health and wellness more broadly. And I think on the flip side a little bit, I'm some of the time torn between what is increasing access and what isn't. So when you go down the path of like connected fitness, is a $2,000 screen, and strength training setup in the home accessible for people? Or, to the extent that therapy, we've written about this on Insider quite a bit, the numbers are astronomical. The people that go untreated, and the amount of time that goes in between treatments, or without being able to access care. Who are we increasing access for? And is the thought process that, over time we're going to be able to lower the cost to the extent that it's going to be broadly accessible, or is it's only going to be accessible to a specific cohort? I know it's kind of, a broad question, but just how do you think about that in terms of like, we want to, and, you mentioned part of your mission is, how do you help people live better, happier lives, healthier lives? So at what point, and like, kind of where's the line between what's accessible and what's not?
Yeah, it's a great question. And because it's all about how do we drive down cost so that, to your point, so that you are actually making care or health or wellness more accessible to a greater percentage of our population. So, again, for SonderMind, for example, the ability to pay for mental health with insurance and having that kind of coverage, dramatically expands the percentage of our population that can seek care. For companies like Tempo, I'd say in the short term, as these companies are still young and scaling and sort of refining cost structures, supply chains, go-to-market models. There are innovative sort of payment models that if you were to kind of amortize the cost over many years, is still, significantly less expensive for kind of similarly quality experiences that someone may seek outside of the home. But a primary goal is absolutely to drive down cost, become a sort of more of a mass market retail, platform that is accessible to a much greater percentage of our population. But overall, another area that we're focused on, where I'm focused on in particular, just to kind of take things one step further, is there's been a significant shift in how consumers are receiving health and wellness, benefits. For example, 150 million consumers receive access to health and wellness actually through their employers, which accounts for 1.3 trillion of healthcare spend. And so as you think about those enormous numbers, we need to make sure that experience is working. Large self-insured employers are not traditionally set up to be, healthcare providers and, sort of benefits experts, know how to deliver personalized experience to their employees so they know exactly who they should be seeing for, different elements of their healthcare experience to have really high quality outcomes, but at a much lower cost. So, I'm actually spending a lot of time with companies that are, focused on helping these self-insured employers, let's say in the Fortune 500, Fortune 1000, ecosystem that employ a huge percentage of our population, to provide those employees with, the most well-rounded, best health and wellness care possible at the lowest cost. So really aligning those those experiences, aligning, the goal of, better care at lower cost. There are a lot of really innovative companies that are helping with that, kind of creating these, narrow networks to be able to empower employees with the data that they need so they know where to go to get the highest quality care at the lowest price. And so we're really excited about some of the innovation we're seeing in that part of the world.
Yeah, I think that's really interesting. And that's kind of a blend maybe of two questions that I wanted to ask. One being, what are beyond, we talked about the connected fitness and at-home space. We talked about mental health. What other categories are you tracking? It sounds like this kind of healthcare space. And then potentially what startup, what company, what kind of area do you want to invest in that maybe you hope there was a company building this specific solution that you could get really excited about?
Yeah. So, I'll answer this in two ways. Maybe firstly, in something that I see that, in addition to everything I just kind of talked through about sort of the intersection of, health and wellness and human capital management for large self-insured employers. Another thing that I think about a lot is, as we think about this next wave of health and wellness, we need a really highly trained, efficiently organized workforce to support this next wave of health and wellness delivery. And so, really the workforce management, training, education, certification of, the health and wellness focused workforce is an area that I'm fascinated by and would hope to, find investment opportunities within. So that's kind of a short-term opportunity that I see. I think if I were to kind of dream the dream as a consumer as to, what I wish would perhaps exist for myself. And it really speaks to the fact, obviously, digital experiences are table stakes. So it's really about, leveraging data to provide hyper-personalized experiences across, fitness, sleep, nutrition, healthcare. What I would love is, sort of a deeply personalized, nutrition platform that really understands, what I'm doing on a day-to-day basis and can make sure that I'm sort of, fueling my, physical and mental self with exactly the right things. I know we're a bit of a ways away from that, but having these kind of hyper personalized, nutrition oriented platforms is something else that I get excited about. And more broadly as a firm, we certainly have a thesis that's related to kind of food 3.0, and kind of these deeply personalized nutrition platforms are a part of that.
Yeah, I think all those things that we've covered, from the fitness to mental health to nutrition to the healthcare piece, certainly touched a lot of the aspects of the health and wellness landscape, and kind of really grateful for those insights. So as we look to wrap up here, we'll get you out of here on this. Where can listeners learn more about what you're working on and General Catalyst in general?
Yeah, so I'd say the easy and short answer is to check out our website and our GC Amplified section of our website. It talks about all of our new investing activity, a lot of content related to thematic areas of interest, thought leadership, new books that, partners of mine are publishing. I'm not yet in the authorship phase, but have partners who are. So that's kind of the best way to check us out in real time and see what we're up to.
Excellent. Well, it was great talking to you today. I appreciate you making the time, and I'm excited to share this conversation.
Thanks so much for the time. It was great to chat and share ideas. And, I'm a huge supporter and follower. And so thanks for all that you do for this community.
Thanks, everyone, for listening to today's episode. For more from Fit Insider, visit insider.fit.co and subscribe to our weekly newsletter for insights and analysis on the business of fitness and wellness. Then, go ahead and subscribe, rate, and review the podcast. See you next time.